G'day everyone, welcome to another CSBP Fertilisers Market Update. I'm Johnston and joined as ever by our Sales Strategy and Reliability Manager, Ben Sudlow. Welcome, Ben.
Good morning, Gray, and happy birthday to you today.
Thank you very much, that's very kind. But really what the listeners want to hear about is not my birthday. In fact, it's ammonium phosphates and what's happening in that market, because it's becoming very relevant to decisions they'll be making ahead of next growing season. What's the play in the world of ammonium phosphates at the moment?
Definitely ammonium phosphates now, as the WA market starts to think about bringing the phosphates in, and we've got ships heading this way now for 25 season for both production but also finished product. Where we sit now, fertiliser as an indication of the phosphate market, prices moved down and then they've ratcheted up over the last 2 or 3 months, and they've been pretty much back up to the sort of levels they were this time last year and sat for much of the period where the market imported into WA through sort of November to February last year and into early this year. Indian market has basically sort of held off buying on the hope that their non-buying would see the prices drift down. That didn't happen. And they got down to the point where we understand that they've only got like 1 million tonnes sitting in their pipeline now, and so they're now struggling. The price hasn't corrected down like they hoped, and now they've just got to buy because they've got actual demand for their spring season through November and December. And what that's seen then is they've supported near-term pricing and expected that'll hold through their actual demand over the next coming months. So that's at one side, which has very much been supporting immediate prices. But on the other side of it, you've got other markets, both being Brazil and the US, where both prices of MAP and DAP are being seen to be relatively overpriced compared with the grain that they're getting. And the two indications of that, which I read this morning, in the US, they talk about this barter ratio, the cost of corn versus the cost of MAP. Basically, it means if the corn price is too low, if MAP prices is too high, then you've got to use more corn to buy your tonne of MAP. Mm-hmm. And in this circumstance, that ratio is now as high as it's been in 15 years. And conversely, also that ratio, which is soybean to MAP price in Brazil, is also quite high. So that's sort of seeing this affordability being capped out. So you've got on one side, you've got absolute strong demand and very tight supply, and in other markets you're seeing so this affordability cap being reached, which may be changed where if grain prices recover, and clearly could change if fertiliser prices drop. So you've got two quite different dynamics occurring in the market right now.
And another factor often in the global market for phosphates is China and whether they are going to be active as exporters or not. It's still a little uncertain.
Very much so. There's an expectation that the quotas for the December quarter will be clarified in coming weeks, and I assume then by the end of September we'll have some clarity about what they do, and it'll be a comparison to what they've done in previous years. Will there be more or less being allowed to be exported? And clearly, if you're adding a whole lot of Chinese ammonium phosphates into the market, at a point in the past they were in excess of 20% of the traded MAP and DAP. Any volume of that sort of significance comes in the market, that could also trigger a price change. If it doesn't, you could see the support for the prices stay up where they are now.
So some big factors you talk through there, and they could, as always, price could go up or could go down in these global markets, but it certainly feels that the markets are reasonably tightly balanced at the moment. Farmers in WA are starting to react to that by certainly taking somewhat of a hedging strategy with their phosphates. Certainly CSBP is seeing a lot of farmers start to bite off at least a portion of their phosphates for the coming season. Seems like the sort of sensible strategy we'd be expecting.
Oh, look, I think so. I mean, as they do, as many growers now do with their grain, and probably increasingly doing with their fertiliser. Are you going to sit back and hope you're going to get the bottom of the market or the top of or pay the top of the market? Probably neither in a sensible market. So if you take a little bit as time goes by, you're going to get a sensible average over the period, and in theory that should give you an economically viable price to put your crop into and make some money on your returns for next year.
So as we're seeing demand for growers to get their contracts in for the 2025 growing season, CSBP is well placed with a position to be able to support that activity?
Absolutely, the stock to buy, and we are seeing some customers coming now and actually starting to see some contracts coming in for next season's fertiliser. Just perhaps not all the volume, but certainly some customers coming in, sort of hedging some of their volume for 25.
And we talk about ammonium phosphates. Of course, we've also got the superphosphate manufacturing plant running at the moment, and that takes us, I think, neatly to our next topic of discussion, which is sulphur and the sulphate of ammonia market in Western Australia. We're seeing some growers looking to super as a potential sulphur source this year, but maybe if I zoom back, where are we at since the last update on sulphate of ammonia? And maybe we could talk a bit about what some options for growers might be for the coming season.
The WA market's been very generously supplied with sulphur through plenty of application of single super over generations and time, particularly as in mixed farming environments. And then the abundance of ammonium sulphate in Western Australia, which has seen sulphur being relatively abundant within agrass, with sugar ammonium sulphate, or through single super. Now, what's changed in recent times, firstly in the last 5-10 years, you've seen much lower reduction in single super because clearly there's not quite as many sheep around. But the biggest change, which we spoke about last time, Gray, has been the closing of the BHP nickel refinery here, which is going to take out a significant portion, in fact, pretty much all of the ammonium sulphate sugar that's come out of that plant will cease to exist in the market. So ammonium sulphate generally is a relatively high-priced nitrogen, seen as cheap per tonne, but you do get the benefit of the sulphur. Now that you take that out, if you take out the volume of ammonium sulphate that was previously supplied by that smelter, there's about 40,000 tonnes of sulphur that then will not be supplied to this market. And in the near term, that's going to roll out in the back end of this year. And we pretty much see that that's going to not be a product. This sugar ammonium sulphate will not be a product that will exist in the near term for supply into the WA market. That is a big change for farmers who have been able to get it for probably as long as I remember, probably 20 or 30 years plus. So
the upshot of all of that, Ben, is I assume a change in the pricing dynamic in the West Australian market for manganese and sulphate of ammonia products.
Definitely, and I think this is a really key element. I spoke to before about how ammonium sulphate was seen as cheap N and free S for many, many years. Now what's changed now is you go from a price which might have been seen as being export parity to import parity, and ammonium sulphate sugar would come out of China where it's in relative abundance and supplied to the WA market. But that change in cost from export parity to import parity broadly is going to see the increasing price of ammonium sulphate by maybe $50 to sort of $70, $80 a tonne. And that economic value difference changes people's value then of nitrogen and sulphur in that, even if it were available. And therefore the market moves to perhaps sugar doesn't exist, and then what are my choices beyond that is sulphur in a cropping compound or sulphur in a granular ammonium sulphate, or as we've spoken about, sulphur that might come through the pasture phase or in single super.
So those are the three kind of strategies that CSBP has seen kind of coming in the early contracting activity we've seen for the 2025 season. We're well positioned to support each of those, to support super, to support sulphur in a cropping compound, or to support manganese in season.
Yeah, definitely, Graham. I think we're set to go. The one thing that I think we need some early read on is if farmers out there suddenly see this is a changing dynamic and they've been typically putting out 100 kilos or 200 kilos of ammonium sulphate ahead of onto the sandy soils or ahead of a canola crop or whatever it is, that's now not going to be available. What are the strategies they're going to adopt to make sure that we make the right volume of NS compounds, or that we make sure we manufacture or import the right amount of granular ammonium sulphate?
So Ben, we've talked phosphates and ammonium phosphates, and we've talked sulphur, which is not something we normally tend to discuss in a market update. Something that's also being talked a lot about in the market at the moment is manganese, given the increase in the amount of liming that's been going on across the state in recent years. CSBP's thinking about options there for the season, and in particular a manganese compound product that could suit that. We're well positioned to support that in the market this year.
Yeah, we are. So we've made a ag manganese, MPS manganese product before, and or sometimes import various manganese products to support that market segment. And we'll be expecting to do the same again. It was only this morning some of our sales guys have mentioned that, well, manganese deficiency is showing up. We know there's more liming going on, and we've just got to make sure we get earlier read on that sort of demand expectation, if that's going to jump a lot, so we can get ourselves right to get the right amount of raw materials here to meet growing market need.
Brilliant. On that bombshell, thank you again for joining us, Ben Sudlow, and thank you all out there in Fertiliser World. We'll see you again soon. Cheers, bye-bye.
Thanks, Gray.
This podcast is provided as general information only. The content of this podcast is not a recommendation and has been prepared without taking your objectives or circumstances into account. Before acting on the content of this, you should consider its appropriateness to your circumstances and seek independent advice.